On March 13th Eastern Time, all three major U.S. stock indexes closed lower, with the S&P 500 hitting a new low for the year and falling for the third consecutive week. Ongoing Middle East tensions boosted oil prices, while inflation worries and delayed rate cut expectations weighed on risk appetite. The tech sector led declines, the energy sector rallied against the trend, and commodities showed strength in oil and weakness in gold. Closing data showed the Dow Jones Industrial Average fell 119.38 points, or 0.26%, to 46,558.47. The Nasdaq Composite dropped 206.62 points, or 0.93%, to 22,105.36. The S&P 500 lost 40.43 points, or 0.61%, to 6,632.9. For the week, the Dow fell 2.0%, the Nasdaq 1.26%, and the S&P 500 1.6%, as the market remained under broad pressure. Sectors diverged sharply, with tech stocks broadly lower and energy stocks rising against the trend. Large-cap tech stocks pulled back across the board. Meta fell nearly 4%, Apple more than 2%, Microsoft and Nvidia more than 1%, and the Magnificent 7 index dropped 1.59%. Chip stocks were mixed. The Philadelphia Semiconductor Index edged up 0.05%. Micron Technology rose more than 5%, and Broadcom fell more than 4%. The energy sector was supported by surging oil prices, with ConocoPhillips and ExxonMobil closing higher. Chinese concept stocks were mixed. NIO gained more than 5%, Alibaba and Baidu rose slightly, and Li Auto edged lower. On the macro front, escalating Middle East conflicts raised energy supply risks, pushing international oil prices up more than 3% and worsening sticky inflation concerns. U.S. February. CPI and core CPI rose 2.4% and 2.5% year-on-year respectively, slowing the inflation decline. Fed rate cut expectations kept being pushed back, with CME FedWatch pricing in a near 98% chance of steady rates in March. The high-rate environment continued to pressure growth stock valuations. Commodities diverged sharply. International crude oil surged, with Brent crude closing at $103.69 per barrel, up 3.22%. Precious metals weakened in tandem. COMEX gold fell 2.0% to $50.23.10 per ounce, and spot gold dropped 1.17%. Safe haven flows rotated toward oil and U.S. dollar assets. The U.S. dollar index firmed slightly, and U.S. bond yields edged higher, further pressuring equity valuations. Looking ahead, U.S. stocks will remain driven by geopolitics, oil prices, and Fed policy expectations in the near term, with volatility staying elevated. The energy sector offers defensive and inflation hedging value, while high-valued tech segments still face correction pressure. We suggest keeping tight position control, increasing exposure to cyclical and defensive assets like energy, avoiding expensive growth stocks, monitoring geopolitical and inflation updates, and waiting for stabilization signals.